Bitcoin crashed over 2 days at a moment when no one expected it. The largest capital outflow from US ETFs happened at the same time. A death signal was recorded on the chart. The main question: are we on the verge of a historic crash, or is this the start of the biggest rally of the year? I'm Fahad Batan, and I'm here to show you step by step through technical and fundamental analysis of Bitcoin what's happening behind the scenes. Just stay with me until the end of the video. The cryptocurrency market is currently under combined pressure. Short-term negative news is overlapping with long-term positive signals. Selling pressure is high, but there is a window of hope coming from macroeconomic policies. In recent days, Bitcoin experienced its biggest single-day drop of the year. As you can see on the chart, a concerning technical pattern has been confirmed. The 50-day moving average has crossed below the 200-day moving average. Many consider this the beginning of a bear market with a deep correction. What do you think? Is this signal serious? Don't miss the rest of the video for the answer. Spot Bitcoin ETFs in the US are experiencing their worst month ever. According to reports, nearly $4 billion have been withdrawn from these funds just in November. This means institutional investors have moved from the accumulation phase to the selling phase. As a result, there has been intense downward pressure on the market. But things aren't always all bad. Sometimes there are positive signs. The Fear and Greed Index on CoinMarketCap is at 10. This indicates extreme fear. Usually, these types of numbers often appear alongside local bottoms, with increased selling pressure. These points are important opportunities for professional traders. The shocking news is that the likelihood of an interest rate cut by the Federal Reserve at the December meeting has increased. According to the FedWatch tool, this probability has risen from 39% to nearly 69%. The reason for this is the statements made by John Williams, the president of the New York Federal Reserve, who said that the central bank can lower rates without compromising its inflation target. A rate cut is good news for riskier assets like Bitcoin. Why? Because the appeal of traditional assets like bonds gradually decreases and more available liquidity flows into riskier markets. In the past 24 hours, several major altcoins like Ethereum and Solana have managed to relieve some of the downward pressure. This shows that some sectors of the market have stabilized in the short term. As you can see on the chart, the 50-day and 200-day moving averages have not crossed each other, and this could indicate stability for the prices of other cryptocurrencies. To sum up, the market is caught between two forces. On one hand, there is selling pressure caused by ETF outflows and concerning technical signals. On the other hand, there is hope for a change in the Federal Reserve's monetary policy. In the short term, downward pressure is dominant. Analysts have even suggested the possibility of a drop to the $74,000 range or even $60,000. However, if the Federal Reserve lowers interest rates, this could trigger a rebound rally. Perhaps it's even part of behind-the-scenes policies. Now let's get to the chart. As you can clearly see on the chart, after its recent bullish move and after breaking its upward trend line, Bitcoin experienced a drop down to the $80,000 price range. Considering the economic policies and the December meeting, the important support zone is at $76,000. We have the dollar. If this support level holds, a corrective or potentially bullish move to $100,000 is possible. However, if the $74,000 support is broken, a significant drop down to $59,000 is also likely. As you can see on the chart, I will mark the reversal points for you. If the price on the chart can bounce back from $74,000, it might reverse, but if it can't hold at $74,000, If it fails to hold as a support level and subsequently breaks down, the price could potentially drop to the range of $59,000 to $60,000. As you can clearly see on the chart displayed here, I have specifically marked this particular range for you to observe, making it easier to identify. Additionally, the rally could also go up to as high as $107,000, which is a significant increase from the current levels. Regarding the RSI, it is also in the oversold zone. As you can see, at the level of 20, it indicates the strong power of the sellers and clearly shows their dominance. Also, my analysis and opinions are purely my personal views, and the responsibility for any investment decision lies with you personally. If you enjoyed this analysis, be sure to like it, and to see my future analyses, subscribe to the channel so you'll always be the first to see my analyses. Until the next video, goodbye.